The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman. This is the Tiger Technicians Hour on Tuesday, the 5th of August. Yep, we're well into August. And what are we looking at? We're looking at the Dow right now, down, down 89 at 44,085. So what I told subscribers that the reason why we did start the short position was only because the Dow made a peak D. Remember, the peak D is where we start to look and say that's where other things can happen. But the 9-period moving average was still very strong, but starting to turn down. The MACD deflected low on the daily chart. The on-balance volume made a little spike up right on the day of the 23rd of July, where it went to 45,016. That was the high, most recent high, not the all-time high. And the stochastic was already turning down. The on-balance volume did a little double top and then started to pull back. And it just said to me, everything I'm looking at, and then there's another factor. So this is something you just cannot put into, how do you put into a software program when you're getting a little nervous? I have a technique that says for my subscribers to my opening call newsletter, that when I start to have too many positions, even if they're looking like they would be good positions to put on, and even if they are short positions included into the portfolio of long positions, when I get too many, and that's, overall we've got, I'm not sure exactly how many I should say, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So we had about 15. When it gets to 15 or 16 positions, it's just too many things. And I always say, okay, be careful. And I mentioned this last week. I said, there's a problem. Too many positions. This is invariably where the market starts to pull back. So how do you put that into a computer program? Anyway, that together with a number of other things that I was looking at, one of them being right here. Let me just put this in here. INDU. This is the Chapman Wave Dark News Index, where I usually look at yields, but for quite some time, it hasn't really just been yields. It's been tariffs. It's been the Fed. It's just a whole bunch of things. And I said we made an internal high and then a residual high back in July, from the 3rd of July. And then we pulled back some, but that 9-period moving average held beautifully over the black 14-period moving average, is still green. And then I said, I think we're making an internal high right here at this 45,016 level on the 23rd. And then a slightly lower high was made on the 28th. And I said, no. This seems to be another internal high, and it was, remember, internal high being the earthquake, and I don't want to be literal about it, just figuratively, or just a metaphor. And then we had the residual high slightly lower, and I said, all of this says to me there should be some kind of a pullback. Well, Friday we certainly got that, but yesterday was a spectacular move to the upside. It was short covering. It was actually new buying. It was a bunch of things that just came together to accelerate the move up, so that you really got almost 600. One point was 600 points up in the Dow, and now I'm saying that pink 9-period moving average to turn back to green. You would have to see the Dow really move much, much higher. So this just says to me there is a cap on the market right now. This is all I'm looking at. I don't know yet how far down. Will we test the low that was made, certainly on the Dow, that was on Friday, that was at 43,340? Well, I don't know. We're now down 40. Look, even now, buying keeps coming in. Look at the S&P, SPX, and these weekly charts. Look, peak E already in the Dow. D's where you say, be careful. E says, all right, you can have a bit of a pullback. You got that. The monthly chart hasn't gone to a new all-time high, about 45,073. The S&P, SPX, X. There we go. The S&P, 63.29, down just $1.50 right now. But look at this. 64.27.02 was the high in July the 31st. It went from a D to a very quick E, which could be an instant restart, but not when it closes sharply lower and then goes even lower than that. And that just says to me, hint, hint, hint. Yeah, P, a leg C in the weekly chart. I've been talking about this for 2-3 weeks now. Now I think we're going to get a peak C. I don't think we're going above 64.27.02 this week, and that'll make a peak C in the weekly chart. Still with fantastic weekly technicals, but the daily technicals have deteriorated. Look, all the technicals are weak, except the 9-period moving has not yet gone below the 14 to go from green to pink. I should make it red, but I want pink so it can differentiate between the candles, which are red when they are down and green when they are up. Look at the QQQ. Nothing here. Up 75 cents at 564.87. Resilient. But, and even look, the 9-period moving average went down sharply, but didn't break under the 14-period moving average, even though the price went way underneath the 14-period moving average. Look at that spring back yesterday, and we'll see where we close today. It would not surprise me if we close a little bit red, and I think it's going to be a peak B in the weekly chart. Hey, let's go to the missing something here. Well, that's the way it is. Pity. All right. Let's just go to the the IWM, the Russell 2000. Now, this is up a little bit more. It's up 59 cents at 220.32. Look, it went right to the 200-period moving average. It went from the double top of 226 both in early July and late July, and then it double topped, pulled back very sharply. And now it's trying to find some strength. But if you look at the technicals, they're all weak, and the 9-period moving average is weak. So with that said, there's a peak D, and so the Dow has gone to a peak E in the weekly. The IWM is in a peak D in the weekly. The others are still holding very, very well. Now I need to go to the SMHs, which is semiconductors. Advanced Micro Devices comes out with earnings after the bell. Now it's hard to believe, on a day like yesterday, we actually bought the 3-time short SOXS. That's the 3-time short, the semiconductors. We went long. We took out some money, made a little bit of money, and then got stopped out just above the entry price. So we actually made money on a day where the semis were. Look at that candle. That's a huge candle. I was going to do that again, and I thought, no, don't push your luck. I think Advanced Micro Devices by this time tomorrow is actually going to be down, regardless of whether it has a overnight pop to the upside. And I think it would have been a perfect entry into the SOXS. So if Duncan is listening right now, this is still my impression that the SOX index could have a decent rally, but it's we already have a 2-time short and a 3-time short. I didn't want to add another short. Same thing. So I'm looking at this and I'm saying I'm prepared to do it when I get some confirmation. It could be tomorrow, but I don't want to do it yet. Another one was a question that I had this time last week, and I said it's acting really nicely, and that was Nail. This is DX Home Builders and Suppliers, but it's 3 times long. And I said, I would have bought it. I'm looking to see the XLB, that's materials. See, XLB. Yeah, that is the materials. So I didn't do anything, but the nails, which is the
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi, folks. I had a couple of questions I just want to get to because it's important that I keep things up as they come. Otherwise, I'm going to run out of time. So you remember yesterday I had a question about Harmony, and the question was, should I take some money off right now and put it back later on? It's basically been good to me. I don't know what I should. And I said, no, I don't want to tell you to do that. I think you should stay in the position. Harmony Gold, South African gold miner. It's at 1561. Now it's up 21 cents after a fabulous gap up day yesterday. It's even higher. In leg D, yeah, in D, you got to be, that's where other things can happen. But look at this. If you look at this pattern right here, look at that. And if you look at this pattern right here, this is the Chapman falling axe formation, breaking to the upside, which could turn out to be, let me just put this in. So basically what we're looking at is, this is the pattern we always look at, where you go up, get to maybe a DE, and then you start to make lower highs and much lower lows. And all of a sudden, I must change this chart. So it used to look great, and then I lost it, and I redid it. But this should be in a different color so you can see it. Then all of a sudden, it finds some support, and it turns around, makes a cup formation, takes out the upper declining, expanding cone resistance, and then all of a sudden you start to test the left side high. That's great, because why? We're always looking at this pattern here. The reverse dreaded H pattern is the Y. Hey, wait a minute. But what if it's the other way around? What if you do this? Remember, I just turned this chart. It's even upside down. Look. So this is the falling axe upside down, and it comes down sharply, and then it starts to rise. Usually goes to peak A or a B, and then it fails, and it makes this pattern right here, the dreaded H. I'm going to be doing this in a webinar coming up very soon, and then we are trying to plan it. It's just, there's a lot of machinations that we've got to go through to get it right, because then I want to follow it up with a live demonstration of all these techniques the following day. We'll see how we're going to get that. So look at this. So here's your H pattern. So this is, look at that one over there. That is where this breaks out and it makes a cup formation and does that. This is the H pattern, because if that starts to fail, you can come back down. So what do we have here? We have the potential for the dreaded H, but it's gone all the way to a D. When it goes to a D, it means, yeah, it could pull back, but every once in a while, it actually takes out the lows, but very often it's used up upside energy and it's used downside energy. So that means it usually stalls and it actually starts to tackle that upper trend line. So all I'm saying is I love what I'm seeing right here. I think this is great. The weekly chart, I've called it a B. There's no other way, because from G you never get an H. That's a B. This is an A failure, dreaded H right there. There's another dreaded H right there. And now we've got a brand new A to B to a leg C, and it's in a very tiny rectangle formation. So what I'm going to say is, if you're taking off a little bit yesterday, that would be okay. I mean, you've got your core position, but I'm looking at this and I'm saying, what on earth is going on with gold that it's in this rectangle, but 9-period moving average is holding so beautifully in the weekly chart, and silver has a slightly better pattern. Look, there's your silver right there. It still looks like it's in a buy mode wanting to go to a D. The monthly chart's already gone to a leg E. So we have core mining, which is a silver stock, and look how nicely it's done. We've had it for quite some time, from $7.92. It hit $9.97. We've taken just a little bit off, but I try to keep a core position. And this is acting very well. So to go back to the gold stock harmony, I'm just saying, if you feel comfortable, because you do want to take something off to kind of reward yourself, take a little bit off here, that's fine. But I don't want you to really change your position. Let's see how it handles the 15. It's got a little bit to go. If we can touch $16.25, that's just another pattern altogether, because now I shouldn't say now, I'm saying then it will be showing that it has the capability to break the rectangle and start to form this fabulous cup formation. So please don't do anything. The other question was, and I said I'd write it down and I'd get to it. Of course, I wrote it down, but I've written down, okay. So I've written down, God, what did I say I was going to get today? SoFi? No, it wasn't SoFi. SOFI. Yeah, so I'll follow it. I don't see any reason why you should do anything with that. Yeah, SoFi just went to a peak G at 25.11 a week ago, and it's just stalling right now, peak D in the daily. Remember, so I'm anticipating that the XLF, because yields are coming down a little bit, that the XLF is kind of getting stuck here, and it hit 53s. It made a little double top there at a peak E right there, and that was around about the 23rd or so of July. It's now the daily is in a sell mode. Weekly is still very strong, having gone to a peak C right at the Chapman wave inside. These are all techniques that I'd like to demonstrate live. And you could be putting on trading positions, but in the meantime, it's the technique itself that I'd like to explain. Look, there's the inside track repellent zone, and it did pull back on the XLF. Remember, I've got this chart here of the XLF. I don't even want to look at this because I was short for a little while. I don't know how they got stopped out, but it did. And look where it is now, 63.41. I was in a rush because I was coming up with a show. All right, so what are we looking at here? We're looking at, what did I say? Oh, this is the chart that I want to look at. This is the chart. Oh, it should be, what did I change? SPY. There it is. So I hope this comes out correctly. It's been messing around. Oh, there it is. Perfect. So the XLF is in pink. It's the S&P Select Financial Fund monthly chart. Went to an all-time high in July. Now it's pulled back in August. The SPY went to an all-time high in July. Now it's pulled back, but it's broken out to new highs, all-time highs, in a pattern. The SPY is blue. The sky is blue. The SPY is blue, and the XLF is pink. And look at that. Look at the way it makes highs and lows just perfectly. That's the one that I found over the decades that I've been doing this that really matches so beautifully to the action of the S&P. It's the XLF. So let's get back to the story right here. And it says that the banking sector is just getting a little bit toppy. Therefore, it's another reason why I'm saying I think we're in for a bit of a breather, all right? And more importantly, I want you to just show you, look, GE went to an all-time high yesterday, went a little bit above it. This could be an instant restart. I'm more inclined to call this an E, and we'll have to see where it goes from here. Because I haven't got, look, the MACD is just turning, right now it hasn't quite turned negative, as close. The relative strength is just dipping down a little bit. The stochastic's still very good at 84%. We're making lower highs. The on-balance volume is pulling back a bit, but still strong. Leg C in the weekly chart. I just think that there's a good chance that GE is going to have a digestive phase starting maybe right now as we're talking with the 277.00 was the all-time high round number. Wow, what more could you ask for? At least to say there could be a round number high in G. Another technique that I developed years ago. Very nice. We'll see if it pulls back deeper. We're still long.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. So a couple of things. A couple of reasons why I was asked, why would you have gone short when the market was so strong? Well, one of the reasons is, look, the S&P made a high on the 31st, and I was looking at all the technicals weakening, and my suspicion was that I didn't know it would spike as high as it did, but that there was a very good chance, based on the mannerism with which the on-balance volume made a high just before that. Now, I watched this very closely at that peak D. That peak D, I thought, okay, we did have a very small short at the, I believe it was just before, just on the D, and we got taken out for a very tiny loss. And then I said, no, I think this is a weak market based on, remember, the Chapman Wave Dark News Index, based on my the portfolio where we added. And I said, oh, man, we must be within days of a top. So there were other things. So we did short at the exact day of the high, right, just off the top. And we're still in that position. But most importantly, what I was looking at is I would try to find round numbers in the leading category of stocks. So we've just got it in GE. It's a little late considering that it's just made an all-time high when the others have already pulled back from Friday on that very sharp move. But this is a 277 round number high. If at any point in the next couple of days, it doesn't even have to close. It just has to tick to 277.01. It negates this as a technique. There might be another one the very next day, but it negates it. It says, okay, that's if you go above it, preferably close above it, but at least tick above it. It says, okay. Look at Microsoft. GE, we're still long. Microsoft, we still have a long position, small long position. Makes a high of 555.45 4 sessions ago on the 31st. Pulls back very sharply, gaps up, remember, then it pulls back. And what did it do the very next day on Monday, Tuesday, Wednesday? That was on Thursday. Friday, it pulled back further. And on Monday, it has a 535 round number open, and it has, right now it's trading 533. It did go above a 537.30. This is a different case because this says you've already made the high. Now you're going to use other techniques. So this would be one technique that I'm watching, which says in the next 2 sessions, if Microsoft it can't just tick. It has to close above 535. It negates that pattern, right? Let me just check on Robinhood. Also, the three of them, we still have long positions. So Robinhood had 113.44 high on earnings the other day, and then it pulls back. And I've been looking for round numbers. There was 103 open on the 24th of July, but it broke that by going up above it. And so anything here that reflects on that particular technique, I just don't see right now. So it's holding quite nicely. It's down 92 cents, but it's going to be vulnerable, just like the others, if we start to pull back from here. We've got a peak B in the weekly chart. It's still fantastic. So I'm anticipating that the 93.36 level on Robinhood, I had a question from a couple of subscribers saying, when do we add back into the Robinhood position? And I'm just saying between 95 and 93, that's the area that I'm watching. If it takes out 93, I suspect that we've not got a week or two, but maybe a few weeks of consolidation in the general market. That means I have to go to Bitcoin because I kind of put the two together. Bitcoin's very weak. I've been a little bit reluctant to say that Bitcoin is going to retest the high that was made. I think it's made its high, and I think it's going to stay there for a little while. And we're still long our Bitcoin from way down with the IBIT. This goes way back to, I think it was October of this past year. And I'm anticipating it pulls back and this is the way I'm looking at it at this particular point. And it's down, it's 113,420, down 1840. And what I'd said is, if it closes below 112,500, be careful, because that whole area between 110,000 and 109,000, that really then has to become the key support level. All right. Now we've got a couple of questions. Let me just look at my XOX. I was going to have it at 50 to re-enter. What was the low? 750. We got it just exact yesterday and worked out great, and today I would have had it, and now it's trading at 780. It's okay, there's plenty of time, because if the SMHs are coming, we'll see what happens. I got a feeling Advanced Micro Devices by this time tomorrow, whether it gaps up or not, is actually going to be down. AMD, spectacular. So semiconductors are down 3.25 to 286.99, and Advanced Micro Devices down 2.26. So the all-time high was 227.30 back in March of 2024. It cascades down to the just under 80, comes soaring back, and it goes to a high, a little double top high on the 29th of July at 170. 182.31, pulls back for a day, goes to 182.50. With a what is that? Is that really a round number, 173 low? Yes, it is, the same day. But then it takes it out, goes down even lower to 166.82. Rallies yesterday. I'm looking around. All right, we'll see what happens. All I can say is this: my anticipation, based just on the pattern itself, says that there's no reason why we shouldn't make a dreaded H in Advanced Micro Devices to take out the low of 166.82 in the next 2 days. We'll just see. That's my anticipation. I have no position. This is just my theoretical analysis. Okay. Question came in about Disney. That was for Tommy. He must have answered the question. Remember, folks, at 9 o'clock in the morning, Tommy O'Brien starts off with the whole day with our positions here at TFNN with the guests, and it's a great program. Morning market kickoff, and he does an analysis. He does the fundamental, puts together with the technical, looks at on-balance volume, just as he was taught by Tom. And that's great, and I really appreciate his perspective. It's really important. And we've got lower lows. There's your dreaded H. Pulls back today, down $1.64, 117.74. Now we're getting towards the end of the summer season. This is the Disney season for kids. Right? So I'm looking at this and I'm saying, okay, Disney, I don't know what Tommy said, but I'm looking at it right now. I loved the action in Disney when we wanted it and I didn't get in. It was way down here and then it gapped up. And even the gap, I said, it held the 200 period moving, never got in. And it went all the way from where I was anticipating 101, was 102 is the area, didn't do it, and it screams up to a high of 124.69, peak D on the 30th of June, and now start to pull back. I think it's just digesting huge gains. I wouldn't be surprised if the 116 to 114 areas could support.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019. finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, so FXI, the iShares China Large Cap ETF, went to a leg D. It could be a peak D this month. 39.78 was the left side target from way back in 2022. It got close to it. It's gone to a peak. I'm calling this a peak C for now in the weekly chart. It could be an alternate count, but it doesn't matter. Right now, it's just pull back from a peak D in the daily chart, pull back very sharply from the 39s to the 36s. Now it's bounced to 37.68. Yeah, I just think it's in a kind of a trading range, and my eye right now says between 38.50 and 36. That's kind of the range going out for a couple of weeks. So that's that. Next question came in. I read it down. It was in the, hi Basil, where would you add to AGEN, assuming you consider it favorable? Thanks. AGEN is Agenus Inc. Immuno-oncology, trading at 543, up 3 cents. So this is very interesting. This is where I'm sometimes forced to get an alternate count. Look, the weekly is very clear. It made a peak D, going from the 130s or so all the way to the 7s, and now it's pulled back. Then I wrote in here in the daily chart at 577 on the 3rd of July at 10:45 a.m. It should go to 636 by 9/7 by the 9th of July. So let me just go back here. This is the 3rd of July. Let's find there. That's the 3rd of July right there. And what did it do? It went to $7.34. Should go to 636. Yeah, it went to $7.34 by the 10th. Oh, no, by the 11th. I'm sorry, it was 2 days late, but it went higher. Okay? And then what it does is it pulls back. So now here's the question. What do? Do you change that B to an F because it went from an E? And yes, it had a little inside ABC. Pull back to a lower low. This basically says you've started a brand new move. But I like to be clear. In the Chapman methodology, you go back to correct something only because it makes it much clearer going forward. It's not like you're cheating. This is done. It's a done deal. I could call this X. I could call it Z. It's got nothing to do with the chart. The chart's gone to a high and now making dreaded H patterns with lower lows and lower highs. Therefore, I have no choice but to say, maybe that is an F. And now we've made a little bit more concerted effort on the downside rather than the upside. And that's exactly it. It's trading at 538. So basically, you have to restart. Look, the stochastic's at a 4% way down here. I'm looking at the market pull back. Dow's down. I shouldn't complain. We're okay because we got this. Oh, I'm going to talk about that in a minute. No, I'm going to talk about it right now because I mentioned earlier on where the Dow was only just 40 points lower, and I didn't, and I should have. Basically, this is what I want to do in a webinar for my subscribers. I've done it many times. I'm going to reinforce it. The reason I like to get the outside of moves, whether it's trying to get the low as we did, I mean, going back decades, but I'm talking about March the 6th of 2009, we got the exact day of the low. The S&P made that was Friday. Monday, the S&P made its 66 low. I like to do that. The reason why we've got the March low back in 2020, then the October low back in 2022 is because I want to get the exact ictus. Why? Look, I'll show you why. Because here we are with the let's go to the S&P. So the day of the high, we managed to get 3 times short. Not a big position, but a position, right? And the reason is because when you have big moves going against you, if you get the outer rim, either on the upside or the downside, you have such a leeway. We didn't have to we took a little bit of a profit. We've kept the core position because I don't want to mess around. We've got it, and now all I have to do is say, take me out. But you have to do something spectacular to go all the way back to the high that was made on July the 31st. So I like this is the reason why I try my best to pick the exact moment, if I can, of turns, because it says you've got a little leeway because you get the big move up if it's on the downside, pulling back. You get the big move to the upside, and then there's this kind of the vicissitude of the market says you're going to wiggle and wiggle and wiggle and jiggle for a little while at some point to just relieve that upside energy, so you can rebuild more upside energy. But we're down here. So in this case, we're up here. It just makes me a little more comfortable. That's all I can say. And that's really important. And that was very important. And I'm going to be discussing it more in a webinar on how we can do that and what signs you look for. Meantime, back at the ranch, let's go back to what we were looking at, which was AGEN. And I'm mentioning this because this is where, if I'd called this an F, I'd say, okay, now we can see a bull pullback with lower lows and lower highs. Everything fits perfectly. But it's a little complicated because I've used, look, a Chapman wave cup and ladle says it should go to a leg D. Well, because we just nicked that low, this would have been perfect. But it nicked, and that starts a fresh buy signal to buy mode. So it's got a buy signal. The stochastic didn't go to, it just touched 80%, didn't go over it, and it's pulled back. That's a warning to say, whoops, it could fail. So I'm calling this more likely the peak F, right there. Okay, I just wanted to clarify that sometimes I have to go back. It's your duty in the Chapman wave methodology to go back to correct something so that now, look, I'm clear. I can look at it and I say, trough A. Each lower low is called a trough B. Trough C, and we've got D. D's where other things can happen, but you're so close to the 499, 200 period exponential moving average. So I'm just anticipating I have to wait for something. Stochastic's very weak at 4%. That's like being at 96% on the upside, saying that's fantastic. This is unfantastic. Therefore, you've got to be careful. MACD is still expanding. Got to be careful. On balance volumes pulling back, got to be careful. No, that says that's fine. And the relative strength is pulling back sharply, got to be careful. So it's a biotech stock, therefore at any point you can get a spike to the upside. Let me put it this way. To get that 9-period moving average from pink to green, you're going to have to see 625, or at least 625. And it probably has to be not a one-timer, but a process. So all I can say is I'd be waiting. Looking out, the 9 over the 14 in the weekly is fantastic. That is really good. Looking out, the monthly is just, it's indescribable. If I said it was horrible, that would be a compliment. It's worse than that. It looks gross. But it is a biotech stock, right? So I'm looking at this and I'm saying, well, this Chapman wave, you've got 1 week to go, this week and next week. At any point, if there's a move for a daily chart that starts to trade for 90 minutes above $6.32, you'll probably test the high, which was at $6.58. But it has to be either this week or next week. Otherwise, what we're doing is going from inverted red, Chapman Wave Roman candle, to the base. Now, talk about Roman candle. Here's a technique that I developed years ago. This is the Chapman Wave Roman candle right there. That was made on Friday, and I said to subscribers, if we close above it, that's really positive. But if we close, for 90 minutes at any point, if we start to trade, and this is this is the second day, I said it's going to be negated. This doesn't go for 3 days. You have to look for other things. But if it traded below 43,470 at any point yesterday for 60 minutes, you'd probably test the low. We went above it. Look at the sharp move down, 229, 231 down in the Dow. I'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, we're looking at Rigetti Computing, RGTI. It's up at 16.09. It's up 0.34. It's made a nice bounce today. It hit... Yesterday it was tootling along in the 14s. Today it went to 16.85. This is the action that I'm watching very closely to see. In the sieve that you put down, you put all the corn or something, and everything that falls out, of course, is too small, and everything that holds is good. And this is kind of what I'm looking at now. What is holding up and what is not? I'm anticipating that we're going to see pullbacks in the GEs, the Microsofts, the Robinhoods. What other one was... Amazon right now is trading down. It's trading up 252 after a big move from the 236.53 July 31st high, and that there was, I looked for round numbers there, and there wasn't that I could note. No, so it's pulled back very sharply. It's kind of stuck. If you're looking at Apple, kind of stuck as well. It's pulled back. Look at that weekly chart. That is not very good. So this is going to be very selective. I was looking at Google having had a nice move recently. Google retesting like a triple top high. 198.70 today is the high. 5 sessions ago, it was 198.48. And on the high that was made on the 24th of July, it went to 198.97. So a triple, I usually do this to show that there's a chance that you've got Chapman Wave inside track, repellent zone right there. So we're going to be watching to see if Google pulls back. But it has made a peak D in a weekly chart. And we'll see what happens. But there are going to be some that hold quite well and some that start to show weakness. And that's really the issue at this particular point. RKL. Oh, that's the end of the show. Oh, my goodness. Have a great day. Stay tuned for Steve Rhodes. That was really quick, wasn't it? Steve Rhodes coming up. And I'll be back with Tommy a little later on. Have a great day. That just zoomed by. And FIG, somebody said FIG as we go to the break. FIG is trading, down almost at the opening price, 87. It went all the way to 142. Be careful. I'll be back later.